This is Invested in Climate with Jason Rissman. I see climate as the world's biggest, most diverse, most important movement in human history. Millions of people dedicate themselves every day to protecting the planet. This podcast shares conversations with advocates, entrepreneurs, investors, policy experts, and anyone else that can push our thinking about what's possible and what needs to happen to address climate change. If you have ideas for episodes or feedback, get in touch on LinkedIn. If you enjoy the show, please leave a rating on Apple or Spotify. I'm currently building a new venture. It's related to storytelling and how we engage all sorts of folks in meaningful climate action. If you have expertise in this area, big ideas, or examples of something that's really working, get in touch. Thanks for listening and for doing whatever it is you're doing to support climate progress. Okay, let's get started.
The quality and quantity services and technology companies in the clean energy and climate solution space today in 2025 may be better than we've ever seen again in our 20 plus years of doing this.
Hi, everyone. I always love a chance to hear from someone who's been investing in climate for a long time. Daniel Weiss fits the bill. His firm, the Angeleno Group, was founded in 2001, and since then has led or co-led over $3 billion of investment into clean energy and climate solutions. Daniel and the Angeleno Group also surround themselves with accomplished leaders that bring true global expertise. Their advisory board includes a former U.S. Secretary of Energy, former Secretary of Treasury, a UN ambassador, a Nobel Laureate, and several other top scholars and industry leaders. So I leaned in closely for this conversation, eager to learn from Daniel's perspective. What I heard was somewhat surprising, that despite the headwinds coming from Washington and rippling around the world, strong deal flow, ever-improving talent, and low valuations make this the best time in decades to invest in climate solutions. We spoke about Daniel's background, this unique moment in climate investing, Angeleno Group's thesis, recent investments, and much more. Lots to learn about and consider in this episode. Enjoy. Daniel, welcome to Invested in Climate. It's great to have you here with us today.
Thank you, Jason. It's terrific to be here with you today. And thank you for what you're doing with your podcast to raise awareness about climate issues and educate folks about climate and the planet. So thank you.
Of course. Well, was thrilled and honored to hear that you're a regular listener, that you've listened to some episodes. So great to have you on this side of the table. Before we dive in and learn about the Angeleno Group and the work that you're doing, let's learn a bit about you. I see that you are a grad of both UC Berkeley and Stanford. Won't make you pick a favorite between those two. And that your path to becoming a climate investor was a bit different from most people that I've interviewed, as you were an attorney for many years. What was it in your law career, or perhaps in life more generally, that led you to founding Angeleno Group and focusing on climate almost 25 years ago?
Sure. Well, Jason, we don't want to bore your listeners too much with my stories, but I'll happily answer the question, really maybe dividing it up into the personal and the professional. On the personal front, I am, as you pointed out, a California kid and a native Angeleno. I was born here in Los Angeles, raised here, went to all public schools in LA. And growing up, like I think a lot of kids in Southern California, I would bike and hike and play outside and go to the park with my friends. And being outside and being in nature was actually a big part of my childhood. My mom was an early card-carrying Sierra Club member, and my brother and I took our first backpacking trip to Yosemite when we were young kids and experienced the magic of the Sierras. And so that was a feature of growing up and being a California kid. But another feature of it, which may not be as some of your listeners may not have experienced themselves as much, is what it was like growing up in LA in the 1970s, the land of cars and smog. And so when I was in elementary school growing up, I think I developed a very real firsthand appreciation for what the environment meant in someone's day-to-day life. And so I looked at this once when my kids were in sixth grade. They're college age now, but when I was in, I think, sixth grade, there were something like 140 stage 1 and stage 2 smog alerts. That's a term that's not even in use for many Angeleno school kids today, but we were literally kept in the classroom from going out onto the blacktop to play soccer or handball because of pollutants in the air. And so that's changed a lot since then in what is really kind of an illustrative example of the power of science and the private sector and policy to make a difference in our world, but we can bracket that and come back to it. But again, it informed my personal experience growing up and being sensitized to issues of the environment. Flash forward to the professional piece. When I went to law school, I met a person who had become an important mentor of mine named Warren Christopher. Chris was the former Secretary of State for the United States, met me when I was a Pisher Law student in my 20s and took an interest in me for some reason that I will never quite understand. But the relevance of that to the formation of Angeleno Group and what we do today is that when I started out as a baby lawyer, I worked under him at what was then the oldest, largest law firm in LA called O'Melveny and Myers, where he had served as chair. And Chris was on the board of a company called Edison International, Southern California Edison, as it's known to many, one of the largest utilities in the Western U.S. And so as a bag-carrying junior associate, I did a lot of transactional work, buying, selling, financing energy and energy-related assets. And it struck us at the time, and I realize in retrospect, this is over 20 years ago, how incredibly naive this was, but that there was this white space in the institutional investment world around energy, and that there was almost a barbell approach to institutional private equity investing in the space. And on one end of the barbell, it was largely populated with well-capitalized investors buying hard assets, power plants, pipelines, drilling rigs. On the other end of the barbell, there were hedge funds that were making money in commodity price arbitrage in oil or natural gas. But in the middle, there seemed to be this white space. Who was going to be focused on the future of this, $6 trillion vertical of the global economy and where it might go? It was then called alternative energy. And so it was that white space that my co-founders and I set out to fill when we founded Angeleno Group in 2001.
Thanks, Daniel. Your history and what you've seen is truly interesting, as is the range of ways that you're involved in climate. You're on the board of several organizations, including the World Resources Institute. It's an organization that I greatly admire for the quality and rigor of their research and the systems thinking that they enable. What have you learned from your involvement in WRI?
Well, thank you for asking about WRI, Jason. It's an organization that's near and dear to me. And as your listeners may or may not know, I would humbly submit it's one of the leading, if not the leading, globally focused environmental think tank and do tank operating in the world today. There are about 2,200 plus people that work for WRI, 500 people in Washington, D.C., and the majority of people outside of the U.S. And that really brings us to sort of at least part of the answer to your question, which is what have I learned? I think I'm learning a lot. I've learned a lot and I continue to learn a lot. And it's a privilege to serve on their board and is now vice chair of their board. But two things maybe to focus on for the purpose of this conversation. One is the W in WRI, the World Resources Institute. So one of the things that I've certainly come to appreciate more deeply is that in looking at systems change around sustainability and environmental issues, it truly is a global issue. And it's somehow easy to lose that focus when you're sitting inside of the largest economy in the world in the United States. But not only are most of the emissions, as we know, occurring today outside of the borders of the United States, but arguably some of the most promising solutions and ways to deliver impact are happening in places like Latin America, where we're about to celebrate the 10th anniversary of the Paris Climate Agreement with COP30 in Belém, or in places like Asia or Africa. And WRI has a very significant presence in all of those parts of the world and is doing research and policy work in all of those parts of the world. And being involved in WRI really sort of underscores and brings home the importance of the global nature of addressing this issue. I guess maybe a second point, which has to do more with organizational effectiveness, is the way in which WRI has been able to have an impact. So being a participant observer on their board, I've really come to appreciate the power of collaboration and humility in making an NGO or a nonprofit organization effective. So one of the cultural traits of WRI, and I think this is true since it was founded more than 40 years ago, initially through a grant, in fact, by the MacArthur Foundation, is that if there is such a category of this in the NGO world, it's an NGO, a low ego NGO. So it's not about planting its flag or carrying its flag. It's about having an impact, getting work done, being catalyst for change on policy issues and systemic issues related to sustainability. And so whether, it's their ability to convene people, which led, I think in part to things like the formation of the Intergovernmental Panel on Climate Change, or the creation of the Greenhouse Gas Protocol, which, as you probably know, governs more than 90% of the Fortune 500 emissions monitoring, or on putting together technology platforms like Global Nature Watch, which was experienced a recent announcement. I'd encourage you to take a look at them, which is one of the leading data and information platforms in the world to monitor things like forestry, water, land degradation. And they've done that by partnering with other NGOs, partnering with governments, partnering with the private sector and organizations like Google and Esri and others. And so this culture of partnership and collaboration, which is core to WRI's DNA, has really been a part of what makes them so effective. And it makes me optimistic, particularly in this challenged moment on a lot of issues connected to sustainability, that they're going to be huge agents of change and catalysts.
Daniel, thanks for that context, and exciting that even when you zoom out and think of it from a global perspective, you are finding those elements of optimism. Seems a recurrent theme and one that we'll love to keep hearing about. Let's talk more.
By the way, on that comment of optimism, not to interrupt, in the spirit of plugging WRI one more time, I just happen to have on my desk a copy of a new book that your readers might, or your listeners might be interested in, called The New Global Possible: Rebuilding Optimism in the Age of Climate Crisis, which was published hot off the presses by Ani Dasgupta, the CEO of WRI, and had sort of a coming out party at Climate Week in New York recently. But would encourage folks who want to think about the W in around environmental issues and also a solutions orientation to take a look at that book. It's terrific and inspiring.
Thanks, Daniel. Great to hear about The New Global Possible. We will include a link to it in the show notes so that folks can pick up a copy. Thank you for that shout out. Sounds like a great book.
Sure. So as mentioned, the firm was founded in 2001. Again, in retrospect, kind of a crazy and foolish time to launch an investment organization dedicated to clean energy and climate. So to remind folks, in 2001, we were on the heels of the Enron bankruptcy. I think oil commodity prices may have been in the 20s. California was experiencing a power crisis that actually led to the recalling of our governor. And then, of course, the entire country was experiencing the trauma of 9/11. It was a rough time to be launching an investment organization, particularly in this space. Nonetheless, we were young and naive and plowed ahead anyway, and began to make investments for a number of years, and then launched our first institutional fund in 2005 and have been at it ever since. We've led or co-led about $3 billion of institutional investments in the space inception to date, and are currently investing in clean energy and climate solutions companies today.
Fantastic. And what stage do you like to enter in at? And what sort of check size is typical for you?
So typical check sizes range from $10 to $30 million in equity, and then we'll double or triple that over time with follow-on investments. We like to lead or co-lead investments. And again, our focus is late-stage venture and growth. So that is to say companies that have proven products and technologies and existing commercial traction and are at an inflection point when they may be going from tens of millions of dollars to hopefully hundreds of millions of dollars of revenue. And every once in a while, when we get it right, billions of dollars of revenue.
Daniel, since you've been at this now for over 20 years, I'd love to hear your perspective on how climate investing has changed. Some would say we've experienced several different chapters in climate finance. Walk us through how you've seen climate investing evolve and what chapter you believe we're in now.
So it's a good question. This may sound profoundly tone deaf or counterintuitive because we are in a very difficult environment by many measures for climate investing and in climate tech investing in particular. As you probably know, and many of your listeners know, the aggregate amount of investing in climate tech is in decline year over year, 2025 to 2024, and it declined from 2023 to 2024, not to mention many headwinds that we're experiencing in our own country based on the posture of our current federal government in a lot of these sectors. Having said that, I'm comfortable going on record saying that if you ask members of our team and walk the halls of Angeleno Group, we think that this may be one of the most compelling, if not the most compelling moment we've seen in our 20 plus years to deploy capital in the clean energy and climate solution space in services and technology companies. And maybe sort of, since we're dorky investors, maybe focus on three numbers to sort of explain that, Jason. 25x, 70%, and 75%. So 25x represents the increase in climate tech investing in the aggregate over what really was an extraordinary super cycle, unprecedented super cycle of climate tech VC from 2013 to 2023. So the relevance of that is that that super cycle of climate tech VC planted seeds in an innovation garden, many of which are now coming to fruition, ironically, in a period where the sector is profoundly out of favor, at least as perceived by some. And so deal flow is actually extraordinary. The quality and quantity services and technology companies in the clean energy and climate solution space today in 2025 may be better than we've ever seen again in our 20 plus years of doing this. So deal flow is very compelling. 70%. If you look at the recent high watermark in clean tech valuations, which really top ticked most recently about 4 years ago during the pandemic and SPAC mania, valuations as of the end of Q1 of this year are down 70% in the public markets. Now, the private markets, as you know, typically lag the public markets. But the punchline here is valuations are compelling. So deal flow is up, valuations are down. And then the third number is really this sort of 75% number, which is about global secular tailwinds around energy transition and decarbonization. So even though the United States, which represents somewhere in the vicinity of 25% of global GDP, has announced that we are going to pull out of the Paris Climate Agreement, I think that becomes effective in January of next year, there's still 3/4 of the global economy that has signed up to the Paris Climate Agreement. And the train has sort of left the station, at least as we see it, in terms of recognition that we're on a long-term trajectory going from a low efficiency, high carbon world to a high efficiency, low carbon world. And so you put those sort of three factors together, great deal flow, attractive valuations, long-term tailwinds, and those are factors that an investor likes to see. Conditions precedent, if you will, that are compelling for investors to deploy capital.
Thanks, Daniel. Great context. And it's important to remember that despite other headlines or headwinds coming from Washington, renewable energy continues to dominate, accounting now for 93% of new power added to the grid in the US this year. So lots of reason to see that this is still a long-term trend with continued momentum.
Yeah, to your point about long-term trends, Jason, other points to mention that are sort of global megatrends that are additional potential tailwinds worth mentioning. One is, as I think maybe others on your program have talked about before, we're experiencing a fundamental shift in demand for electricity, or what is called load growth. And so after 20 years of anemic load growth because of things like data centers and AI and electrification of various parts of the economy, we are now expected to have very significant load growth over the next 20 years. I think I was reading the other day, just in here in our home state in California, over the last 15 years, I think it is, we installed 1 new gigawatt in CAISO, the independent service operator that governs this region. Over the next 15 years, we're expected to install 10 gigawatts, 10x that number. So there's this massive, again, megatrend, and it's global around electricity demand. The other point, as we sit here in mid-October 2025, obviously there's been a lot of news coming from the Middle East over the last 24 to 48 hours, is the importance of energy independence and energy security. The world, in part because of experiences like what's happening in Ukraine, in Europe, or in the Middle East, again, is increasingly focused on the fact that domestic security issues and energy independence issues are an important geopolitical consideration. And, the amazing thing about solar PV is it's not imported through the Straits of Hormuz. So the focus on energy independence and energy security is another global sort of megatrend of relevance to decarbonization.
Daniel, one thing that seems to make the Angeleno Group unique is the deep industry experience of not only your team, but also a really robust board of advisors. It includes some very prominent individuals who have served in government, like former U.S. Treasury Secretary Janet Yellen. Tell us about the group and why they're important to your work.
Thanks, Jason. We're very proud and feel privileged to be associated with this group of 13 extraordinary people that really fall into three categories generally of relevance to our investment strategy. 1, science and technology. 2, corporate and industrial leadership. And 3, policy and regulatory expertise, all connected to clean energy and climate in some way. And these individuals are helpful with deal sourcing, with due diligence, when we're evaluating investments, with post-investment value add. Some of our board members end up joining boards of our portfolio companies. I can think of one in particular, Laura Tyson, who's on the board of a publicly traded clean energy storage company of ours called STEM. There are numerous ways that we engage with our advisory board, and they're really central and involved in how we do what we do. In fact, coming up here in a couple of weeks, we're going to have our Q4 2025 board meeting, and our board members will descend on Los Angeles and meet with members of our investment team, some of our current and former CEOs and thought leaders to talk about our investment pipeline, the general investment landscape around clean energy and climate. They're an enormously important part of our firm architecture, and we're grateful to have their involvement.
Let's turn to the opportunities you see. Your firm has 7 focus areas. We won't go through all of them, but they range from energy to infrastructure to resource efficiency to adaptation. How would you describe your investment thesis?
We are a venture capital and growth equity firm focused on investing in clean energy and climate solution services and technology companies. We take a broad view of what subsectors fit into under the rubric of clean energy and climate solutions. But all services and technology companies, we generally don't invest in project finance. Again, we invest in operating businesses that are delivering services and technologies into that ecosystem. And we typically make a significant minority investment, join the board of the company, partner with the management team, and help scale the business. That's sort of our MO.
And within all those different sectors, are there focus areas that you personally are most bullish on today?
Well, maybe the most illustrative way to answer that question, Jason, is to just pick a couple of recent investments. One recent investment that we announced is illustrative of a theme that we're excited about. And also it may also answer some of your questions about sort of our investment approach and philosophy. It's a company called Azzo, AZZO, and it was announced several months ago. It's an EMS company, an energy management software company that enables microgrids to function more efficiently. So let's just say, for example, you're a commercial or industrial customer like an airport, and you have gensets and EV chargers and solar installed in your airport, and you need those devices to talk to each other and talk to the grid more effectively. You will use this software platform from Azzo to do that. Another recent, again, so this is a company that has proven products and technology, millions of dollars in revenue, is scaling, has a strong management team, and is growing their presence in the US. It's actually was originally domiciled in Australia and founded by a US entrepreneur. And so it's an example of an area that we're very interested in, which is technology enablement services for the grid. Sticking with the grid for a minute, but maybe another angle on the grid. By the time this show airs, as I understand it, we may have publicly announced our sixth investment out of our most recent fund in a company that uses what's called EFD technology, early fault detection technology, to reduce wildfire risk on transmission lines for the grid. The other interesting part, again, this is a company with proven products and technology that is scaling, for which the North American market is critical. Interestingly, in both of these cases, Jason, the companies are offering an economic value proposition to their customers, independent, one might say, of sort of a green regulatory driver or a climate value proposition. In both of these cases, there are climate value propositions to the customers, making grids more efficient, energy efficiency related technologies, and of course, in wildfire resilience, addressing the impacts of extreme weather events and wildfire risk. But also in both cases, take, for example, the EFD company, the early fault detection company, a number of their customers are buying the product because they're helping them optimize their operations and maintenance fleets. So imagine if you have more intelligence in where to roll your trucks to maintain your grid, harden, strengthen your grid, you're able to utilize that infrastructure more efficiently and save money, as well as increasing the performance of the grid and managing extreme weather risk associated with things like wildfires. Same thing for Azzo. Again, these are companies that are offering economic value proposition independent of regulatory drivers to their customers.
Well, Daniel, I know that's from talking to you already that by nature, you're probably often an optimist. I'd like to also have some real talk around challenges that your firm and your portfolio companies have been facing. We've spoken a lot about how climate investing has evolved, and you made the case that it's actually a really compelling time to invest, given increase in deal flow and the lower valuations. We do hear about headwinds, politics, macro conditions, uncertainty, and even just the migration of capital to the AI boom. Has this environment impacted your portfolio and the firm in ways that you didn't expect? What are challenges and opportunities that you're facing that are different than you encountered in past years or past decades?
There's no question, again, particularly in the United States, there's been a steady drumbeat of challenging news. And so whether it's, again, the withdrawal of the Paris Climate Agreement, how we started off the year, to more recently, the passage of the so-called One Big Beautiful Tax Bill, which overturned many of provisions, as you and your listeners know, the Inflation Reduction Act, to more recent regulatory activity, attacking things, for example, like the endangerment finding or other long-standing public policy standards addressing pollution and emissions. It's again, a lot of zigs and zags and challenges for the space. And there's no question that we're experiencing it. Our portfolio companies are experiencing it. Two very significant ways are that it's very hard to raise money right now if you are a venture-backed business in the space. As you pointed out, there are other sectors of the economy that are acting like a vacuum, sucking up a disproportionate amount of venture financing. And so if you are a climate tech entrepreneur in this environment and you're looking to raise your next round of capital, it's a rocky road ahead in many cases. A second way that it's impacting our portfolio companies is exits and monetization events. So you'd be hard pressed to find a list of blockbuster IPOs in the clean tech space anytime recently. And so the public capital markets have also largely been closed in this space. And so climate finance is an area that's challenged at precisely the moment, frankly, when there's a great sense of urgency and we're way behind the ball. We need to, by certain third-party estimates, spend somewhere in the vicinity of $250 trillion globally to get to net zero by 2050. And we're running $3.5 to $4 trillion a year shy of where we need to get to that number. And so it is a very difficult time in terms of mobilizing climate finance. And even though there are some positive indicators and overall the large long-term trends globally are still moving towards areas like energy transition, you're probably well aware of the fact that estimates for this year suggest we'll spend $2 trillion on clean energy versus about half that for fossil fuels. But there are very significant headwinds, as you point out. It's a tough time in the space.
Well, looking forward, what investments and changes do you feel are actually most needed to ensure a more successful climate transition? You mentioned the need of an additional $2 to $3 trillion of investment per year. I'm curious if you're aware of things that are happening at a structural level or things that you want to make happen or working on with others that can bring about that sort of change to get us where we need to be.
Yes, climate finance is a big part of it. And it's an area that in our spare time, we're trying to work on with colleagues and partners. Actually, you asked about our interaction with our board of advisors. I think, Jason, you're up in Berkeley, if I remember correctly from earlier part of our conversation. And so one of our advisors, Laura Tyson, whom I mentioned earlier, is an economist at UC Berkeley and the former dean of the Haas School of Business there. She and I published earlier this year an article in the California Management Review on climate finance, just this issue of how we need to catalyze, mobilize this $3 to $4 trillion additionally from where we are today to get to these net zero longer term numbers. And so that is a big area of emphasis. And another part of it, frankly, is, again, zooming out, as you pointed out, and thinking globally. So it's not an accident that we've been looking at some businesses outside of the United States. It's a big world out there. Many parts of the world are still very committed to decarbonization of their economies. And so there's a lot of exciting innovation activity and company building activity. And so thinking through a global lens when we look at investing in this sector is also an important perspective to have.
Daniel, we were both at Climate Week in New York this year, where there were well over 1,000 events. How was your experience, and what stood out for you?
One of the highlights of the week for me occurred on Monday of Climate Week, the first day that I was there. And we were asked to go give a talk on climate investing at Columbia Business School. And to be very honest with you, I kind of thought we would show up there and basically there'd be no one in the room who was interested in that topic, and everyone would be at the lecture hall down the way on AI. And I was just blown away and inspired. There were 200 plus students there, lines outside, waiting lists, people standing against the wall. And afterwards, we stuck around there and I talked to each of the students that I could for half an hour after the talk. And virtually every single one of them came up to me and said they wanted to dedicate their professional lives to building a cleaner, more sustainable world, and that they were undeterred by the headwinds or the atmospherics of the current environment, and that this is the way that they wanted to spend their professional lives. And they were smart, and they were talented, and they were motivated. And honestly, it was, for me, impossible to leave that lecture hall not feeling hopeful about the future. So I think that another kind of positive element to focus on going forward is human capital and bringing in the best and brightest minds of the world, many of whom are still very focused and interested in making a difference in this sector.
A great note to end on. Daniel, thank you for your optimism, for that note that I think will inspire many others to feel optimistic, and for all these insights that you shared today. Best of luck.
Thank you, Jason. Same to you.
Thanks for joining us for this episode of Invested in Climate. Please remember to rate us on Apple, Spotify, or Google. Find show notes, sign up for updates, get in touch, and visualize your climate action at investedinclimate.com. This podcast is for informational and entertainment purposes only and does not constitute financial, accounting, or legal advice. Thanks again.